All right, joining us now for more on the market, Zach Hill, head of portfolio management at Horizon Investments. Good morning, Zach. It's good to see you. So, Fed's data dependent.
You too, Joe.
Yeah, the Fed is data dependent. Thank God, right? So, to try to figure out what the Fed's going to say doesn't really matter if we don't know what the data is, does it?
Yeah, I mean, that's the way that we're thinking about it. Last year was really about that kind of interplay between understanding what the Fed wanted to do and needed to do with rates more so than the market. And you know, as we sit here right now, pretty much regardless of what happens at the September CPI or the August CPI print, you know, the Fed's not moving in 2 weeks. And so really what we're thinking about is November and further out. And that's where there's a little bit of dispute. And, you know, so going back to what Mike was saying, I mean, rates do really matter. That's what we're watching kind of across the board here for markets right now.
You point out you've been friendlier to financial assets than many. Do you still feel that way? I don't believe you think there's a recession coming, but we may not have rate cuts anyway.
Yeah, that's right. I mean, we have been more bullish on the economy, and really that kind of comes down to the consumer and the labor market. You really need to break the labor market in order to get a recession, a proper recession that we really care about. And, you know, all signs point to a very, very tight and very healthy labor market. So we think that's a good thing that provides kind of medium-term support for asset prices. But, you know, right now, as we sit here, entering September, it kind of feels to us like we might see a change in trend. And so we're watching markets really, really closely. You know, yields is a big one, and also, you know, the data that we get coming in to kind of see where this next trend that we're going to have before we get to Q3 earnings season.
Some data we do know is a barrel of oil costs $87. You think that makes, if you got to go somewhere in the market, you're not sure financials make sense, or maybe even the overall market, but energy makes sense?
Yeah, I mean, we like energy. You know, a lot of the same kind of reasons for liking energy last year. You have, you know, structural undersupply, years and years of lack of capital investment, you know, investment overhang kind of from the community writ large. All those things still apply. The reason that energy really cooled off at the end of last year, beginning of this year, is that we were afraid of a recession. As we sit here right now, we don't see a recession in the next 6 months. And so you kind of put all that together, and energy trades quite well. And especially when I think you have a kind of an immaculate disinflation view for the market, it's a really, really nice hedge with a lot of asymmetry that we have across our portfolios.
You buy that, though? I mean, if you don't buy that inflation's under control before oil went to $87, how do you buy it now?
Well, you know, I think, Joe, what we've learned about inflation is just we have to be humble and trust our models. But you know, as we kind of look back and say, okay, where do we get things wrong? Where do we get things right? Obviously, you know, energy prices matter not just for headlines, but also for, you know, for the kind of the broad-based. It's one of the most intangible things about inflation that we have. You know, what you drive by and see what the gas station is offering for a gallon of you know, gasoline every day is something that consumers really internalize. And so that's something I think that's really important for us, you know, as we look forward and thinking about, you know, the reaction function for rates and where the Fed's going to go and when they are going to start cutting, which is quite uncertain in our view.
So we're only got about 30 seconds left. What inning are we in terms of this rate hiking cycle?
Oh, I think we're in, you know, the bottom of the eighth, top of the ninth. And really, I don't think it really matters, quite honestly. You know, 25 basis point hike in November. Really, does that change the overall situation when you got rates at 5.5? No. What we're really more focused on is how strong the economy is, how long we can continue to kind of chug along. And for that, the labor market is what we're looking at.
All right. It's not going to be extra innings or a double header or anything, hopefully, like that. That's not on anyone's card. That wouldn't be good.
Those are too many analogies for me. I don't know. I kind of lost you on that one.
I guess you missed the Yankees. They were no hit for like 11 innings, and then they won. It was bizarre. It was the craziest game I've seen. Zach, thank you. Good to have you on. Thanks.